Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your metals market update, your weekend edition. And this is now for Friday, and we are on September 21st, 2018. Now, in the weekend editions, I do things a little different. I first look at the monthly chart, and then I'll go to the weekly charts on everything else that we're going to do. It's a week full of information, a week that took a wild ride. You know, I wrote a gold report this week. And if you want to get that report, all you need to do is go to our website, sign up for it, or give my staff a call, or you can always click up here if you're watching us on YouTube. And the report goes into detail about, number one, the sideways action we've been having. Number two, the resistance at the top and the bottom. Seasonal charts, what to expect from now until year end on a seasonal basis, looking back at 30-year, 50-year, and 15-year patterns, okay? Not going to tell you the conclusion. I'm just going to tell you if you'd like the report, that's how you can get it. All right. Today, you're going to see that the market had a wild day. You had a $20 range, and on the daily charts, you went up to the resistance point and fell back to the support point. It's narrowed in that much, but all at one time. Silver gained a little bit on gold, hasn't done that recently. The stellar performer of the short week here, 1 week, has been copper, which just exploded in price. I think a lot of people short. I think that they're looking and realize the trade war with China's not getting any better. And China said it's going to look inward and use what resources it has for their infrastructure to build their internal economy. Well, they use half the world's copper approximately, and if they're going to do that, and they're going to need more wire, piping, whatever it might be, that probably caught the market there. We have an OPEC meeting. You got to pay attention to that right now. What's it going to do? And of course, we have a stock market, especially in the Dow and the S&P, that's been on a tear to the upside. When I go to the monthly chart, we have sideways action that is trying to break out to the downside. Realize traders might not like it, but it's what it's doing. If you take a look, you had spent from 2016 all the way through 2018 early trying to stay above the 18-month moving average, got up to resistance of the green line, which is the 100-month moving average of closes, and the black dashed lines are Bollinger Bands, an algorithm designed to keep the market trading within them 95% of the time. What happens when that occurs is most times you'll just spin around. But if the power of all that spinning is a breakout now to the downside, look out below. We recently went to as low as 1160. The market, in fact, when we get here, I'll talk about what the market did as it got down there. This is just an area chart of closes, not the high and low of each week. And as you can see, it's hard to argue that the market hasn't been in a downtrend, that it's taken a pause recently, right where it's going sideways. When you look at the daily bar charts, and this shows the weeks rather, high and low, so he's talking about dailies, you can see the pattern now spinning right here. Like I do on a daily chart, I created a study called a swing line so I can look at any chart at any time and decide immediately, is the market in an uptrend or downtrend as defined by one thing, not with any filters on it yet. Is it making higher highs, higher lows, the definition of an uptrend? Lower highs, lower lows, the definition of a downtrend, or just spinning its wheels with a higher high and a lower low. In this case, it's bullish. You've got higher lows, higher highs on the weekly chart. That fights against, I think you'd agree, what we're sort of seeing on the monthly chart. So there's a bit of divergence there. I then look at moving averages. Now, on this chart, because we're looking at a weekly, I'm putting the 200-week moving average, the 100, and the 18. You've got resistance in this market, strong resistance from 1233 to 1235.70. If the market rallies, fine, maybe that's where it goes. The problem is you've got bias down, the swing line up. When the two fight each other, you have nothing. They've got to be with each other, one's filtering out the other. When I look at Bollinger Bands, which are these black dashed lines on the chart right here and right here, they do not run parallel to each other. Remember that. It's an algorithm that's designed to give you an idea of support and resistance. Now, I often, and I teach in my charting course, always pay attention. Has the market been going sideways in them, or is it already trending? This was a trend. This market broke that trend about 5 months ago when we had this rally that carried up to 1217. And when that rally carried there, and you can see it right here, that was August, by the way. This is a weekly chart, so I was wrong in saying 5 months, 5 weeks back here. And that's when it ended. I can go back here, it was still in the downtrend. So I'm just looking at the amount of weeks. It's no longer got that pattern. But it also doesn't have a bullish pattern because it's under the 18-week average, and it's got a lot of resistance at the 200-week. Momentum, though, is turned up. Anytime it's not under 20, it's gradually trying to climb. You have a real confusing time frame right here in the market. But out of confusion comes trends. Remember that. The gold-silver ratio on a weekly basis peaked out at 85. It's backed off about $1.30, $1.20 actually. And what this is how many ounces of silver it takes to buy an ounce of gold. Generally, I can only speak in generalities. What I've learned over my career is if you're going to get a rally in the metal markets, it doesn't occur with silver falling and you need more and more silver to buy an ounce of gold. They generally have to move somewhat together, and they haven't been. When you come to the gold ETF, GLD, you have a pattern of lower highs but higher lows. Confusion. Momentum still down, but the bias is down. I think the bears are still in control of this unless the market takes out 114.79. Take out 112.61 and you reinstate the lower lows, lower highs already in place, and momentum probably just stays down. That'll be a tip-off. This market's in trouble again. That's all you look for, tip-offs. I don't tell you to buy or sell in these tapes. I just tell you what I'm seeing right here from a broader perspective. In my daily subscriber video in the morning, I'm very specific. Buy here, sell there, do this. When you come to GDX, the mining ETF of the gold miners, lower highs, lower lows, still bearish. Momentum is trying to turn its head up. It hasn't yet. It's not over 20. It's trying. It needs to get over 1949 to say, okay, the worst of this is over. It has not done that. The bears are still in control of this market. In silver on the weekly chart, the bears are still in control. Momentum is still locked in bearish. The bias is down as you're under the 18-week average, and the swing line has got lower highs, lower lows. In the copper market, if you knew nothing else, let me remove that. I want you to look at last week, the 100-week average and the 18-week. The 285.95, 284.06. The market has a pattern here of higher lows, and with this week, the higher high. Notice the resistance area where the market's at. This week's high was 283.80. So I'm looking for the resistance if the market can get further rally right into those numbers. And the market momentum, up. So the swing line is up. The momentum is up. You're lacking the bias up from the market closing over the 18-week moving average of closes. In the platinum market, the tip-off was back here as momentum started turning up, right here. That's when the momentum started turning, not this week. Then the market making its run to the 18-week average of closes right now. Palladium has been the strongest, and on the daily charts in my analysis, you've been hearing me say that, as the market has spent a lot of weeks now over this 18-week average. It finally got to the upper Bollinger Band. There's a problem now with platinum. Markets often fail against that number as they did on the lower band. So, got a market with upside momentum, the bias up, not trending into resistance is the way I define it. In the dollar index has been coming down. And I realize the press so often says the dollar's in this great uptrend. On the weekly charts, it is not. The momentum is down. The pattern is lower highs, lower lows, supports at 93.22. The resistance is 94, let's call it 64 if you round off 63.70. And you'd have to take out 95.68 to break this bearish pattern. So that is not acting in an uptrend. You put it all together, you try to come up with something, and I think I've done it with you. I want you to read my gold report. If you haven't read it, it means I didn't send it to you, and the only way you can get it is go to our website and sign up, and my brokers will get it out to you. I'm Ira Epstein. Have a great weekend. I'll see you all Monday.